So today we'll talk about two unprofitable companies I just bought. So the first one is this one here, Heartbeam. This is my average price, $1. Heartbeam is a small cap with a market cap of only $46 million. And as we can see here, this is a pre-revenue company. They're not showing any revenues. They're only losing money. For example, in 2025, their net loss was 21 million. So this is our first unprofitable company. Now, if Heartbeam isn't profitable, if their numbers are looking so bad, then why did I decide to go long here? Why did I decide to buy this stock? So I decided to buy this stock, I decided to buy this company because of the technology they've developed. In case you're not aware, Heartbeam has developed a cardiology device that is 100% portable, that is the size of a credit card. However, it is capable of analyzing your heart, of assessing your heart with the accuracy of a 12-lead electrocardiogram, with the accuracy of a hospital-grade machine. So that's something huge. So let's say you have cardiac problems. Let's say you are watching TV and that you feel something strange in your chest. Now, it could be gas, right? However, it could also be something much more serious, such as a heart attack. Now, what to do in this situation, right? So in this situation, you should rush to the hospital. However, if it's just gas, you'll be going to the hospital for nothing. You will just be losing time. On the other hand, if you stay home and what you are feeling is actually a heart attack, well then, you are also losing time because you should be going to the hospital. So what Heartbeam's device allows you to do is to assess your heart, is to analyze your heart to see if what you are feeling is actually something serious that requires medical attention. So with Heartbeam's device, you can assess that immediately. And you see, it's not just a company saying their device works. They just received the FDA's approval for their technology. However, today, the indication is only for arrhythmia detection, okay? However, the company is now going after the indication for heart attack detection. But okay, now after all, why did I decide to go long here on Heartbeam, right? And by the way, I just changed my scenario because I was in the living room and there was a lot of noise. In any case, why did I decide to buy Heartbeam's shares? What's my argument, right? So I decided to buy Heartbeam's shares because I think their technology is worth far more than the company's current market cap of only, let's say, $50 million. I think their device is worth far more than that. But I can imagine their technology being acquired for 50 million easily, for 100, 200 million. So that's why I decided to buy the stock, because I think they have a very valuable device, a very valuable technology. They're joining forces now with Mount Sinai, okay? I talked about that in this video here, and they are also entering their commercial phase already with a partnership with Clear Cardio. So that's pretty much why I decided to buy the stock, because of the value of their technology. And I think it could be just a matter of time before this company starts showing revenue. Now, once that happens, Heartbeam will be in a completely different level. So yeah, I think that Heartbeam is cheap at the current price. And I think the stock will eventually go to much higher levels. But okay, that was an overview of this company, Heartbeam, right? And now it's time for us to talk about the second stock, the second unprofitable company I just bought. So our second stock is this one here, MineHub Technologies. And my average price is 50 cents, as we can see here. MineHub Technologies has a market cap of $50 million US. However, I think we should also see its market cap in Canadian dollars, which stands at 70 million Canadian. So MineHub is a 70 million Canadian microcap stock that is showing only 1.5 million Canadian in revenue. So here you are pretty much paying like 40, 50 times revenue for this company, which is a very high multiple. So many people could say that MineHub is a very expensive stock. And as we can see here, this is another unprofitable company. Over the last 12 months, MineHub posted a net loss of 5.7 million Canadian. Now, again, if that's the case, if MineHub's numbers look so bad, then why did I decide to go long here? So here I also decided to go long because of the product this company has. But just to give you an overview of MineHub's business, MineHub is a technology company that is offering a platform for the commodities industry. You see, the commodities industry, and especially the mining sector, are still very old school, and many companies still operate using mainly emails and Excel sheets. However, that's not safe, and that results in a huge lack of control. That's why we've been seeing huge frauds in this space. Besides, new ESG regulations are emerging, global supply chains are also becoming much more unstable. So if you are a global commodity company, you need a platform to visualize, to control everything easily. And that's what MineHub allows commodity companies to do. So MineHub is like an operating system for these companies. And you see, even though MineHub is still a very small company, the truth is that it is already partnering with huge names, with giant companies. For example, BHP, Vale, Zijin Mining, Southwire, Codelco, which is the largest copper miner in the world. Codelco is already using this platform for 50% of their operations. And you see, even though MineHub only has around 13 paying customers today, they have like dozens, hundreds of demo customers, demo accounts already testing their platform. So, for example, in their last investor presentation, they show us that they have more than 240 names already in their ecosystem. So for me, it is only a matter of time before more paying customers arrive. So that's why I'm investing in this company, because of the product they have, and because I also believe that many more paying clients will arrive. It is just a matter of time. And again, nothing in this video is investment advice. So yeah, I'm paying 50 million for this company, while it is currently showing only 1.5 million in revenue, but I think it's only a matter of time before they post, I don't know, like 20, 30, 40 million in revenue. So these were the two unprofitable stocks I just bought. That's it for today, and see you next time.